Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. He was class president every year from 6th grade on. Your host and my dad, Matt Hansen.
Welcome to the show, Keeley. I'd like to start with your origin story. How did you get involved in investing in real estate?
Yeah, well, thank you for having me, Matt. I've been excited about this. I came from the corporate world. Built a sales career, been in sales for 18 years. I was VP of sales at an international organization that I, really built a fantastic career at. Just got tired of building somebody else's empire, though. So I left, I quit, start my own consulting firm that I still run today. I'm a sales coach for business owners. But at that time, my dad was getting out of the financial markets. I was on the financial education side of the industry. He was actually trading the markets and managing money as a small hedge fund manager, Forex futures, options, stocks, you name it, he was trading. And many of you know what's been going on with the financial markets, but he just got tired of not being able to achieve the same returns that our investors were used to getting. So he told me, he's like, Keeley, I'm moving into hard assets. We're getting into real estate. Do you want to go into business with me? And Matt, my dad, I was like, that's a heck yeah, I'm in, right? Like, it's an amazing chance to be in business with my father. So we started that journey back in 2017, 2018, and got into multifamily, started buying large apartment complexes. And soon after that, got into agriculture. So we're doing Texas vineyards and ground up development of Texas vineyards in the High Plains AVA of Texas. So that's how we got where we are today.
That's fascinating. So you were ultra successful as a business executive, and then you decided, okay, we're gonna do something different. Now you did multifamily, and now you're kind of morphing into, which are adjacent, real estate. Vineyards, it's real estate still. You're just adding some new stuff. So let's talk a little bit about that. What does it look like? Because it's probably new to everyone. It was new to me a year ago when you first introduced it to me, and of course I was convinced it was a great investment to diversify my portfolio outside of just real estate, really.
Yeah, it is real estate because it's land. So a lot of people, I make sure I clarify, because they're like, are you doing wineries? Like, no, we're just growing grapes. And the word vineyard is a nice marketing term for being a grape farmer. That's literally what we're doing. Is we are growing wine grapes and we are selling the grapes, or crushing it and selling the juice to the wineries. That's where the biggest opportunity is here in the state of Texas. A lot of people don't realize that Texas is actually the 5th largest wine grape growing state in the US. Pretty big market here for wine consumption. It's about a $13.2 billion impact, billion with a B. So it's a big wine market in Texas, but it's all consumed in state. And you'll never see a Texas wine, in a grocery store in San Diego because there's not enough grapes. That's the problem, is the wine demand is dramatically outpacing the wine grape supply. So we're only producing about 50% of the grapes that we need to hit today's wine demand, and it continues to grow and expand. So that's where we saw this fabulous opportunity, connected with a vineyard partner that they run the only fully mechanized vineyard here in Texas. So it's, Texas is kind of outdated when it comes to their vineyards and their operations. It's a lot of hand labor. We're not as sophisticated as y'all out there in California, Matt, but a lot of Texas farmers are just kind of old school. But to give you an example of, at scale, how this impacts your profits and obviously investor returns, a vineyard of our size, of what we're building, is about 350 acres. We can run an operation of that size with three people. That's it. 3 people, heavy machinery. We are, mechanized when it comes to pruning, harvesting, spraying, all of those things. We can use tractors, and about 3 people. And a vineyard of that same size for all the other, farms in Texas would take about 80 to 100 hand laborers in the vineyard to do that. And it's also a slower response time if you need to get out there and prune back your canopy to get more sunlight to the grapes. It takes a while. So we're doing it like California, how California operates. But because of that, we've got a lot higher profit margins, better returns for our investors, because we're doing it at scale. But high level, that's what we're up to here in Texas.
Oh, it's impressive. The fact is, it's the carbon footprint thing. The demand is so strong in Texas for wines that you don't need to export it to another state, if you will. It just can be consumed right there, which is great because now we're not putting stuff on, trains, planes, and automobiles to ship them to Texas to turn into wine. I didn't realize that. That's really good added. And then the other thing that is the technology. I saw a picture of this tractor, and it's like a $500,000 tractor. Isn't that what it is?
Yeah.
So you're using technology.
Yeah.
So
Yeah. And our grapes are actually, they're coming from California. What we're not able to produce here in Texas to keep up with the wine demand, our wineries are having to bring in grapes from California, which carry a lot of additional cost and risk to bring the juice here. And, plus if you've ever met an obnoxious Texan, if you haven't, I'll be your first one, but we don't like it when it's not Texas, right? Don't call it a Texas wine unless it's got Texas grapes. And so a lot of the wineries are wanting to label their wines Texas, but they won't until, they can fill the grape supply problem. So that's another advantage for us. There's actually some of the biggest wineries that we've been talking to would love to take one of their wines national, and that's kind of their vision for the future. So a lot of those large wineries are part of our operational plan, over the next couple of decades. That would be an ultimate goal of ours. But the first one is just to fill the supply gap that's currently happening right now.
What percent of Texas grown grapes are required to call it a Texas wine?
Great question. 75%.
Oh, wow.
So, yeah, 75%. So it's been a real challenge for a lot of wineries. There's also some of the larger wineries, the biggest ones in Texas, will not label it unless it's 100% of the grapes are coming from Texas. So, they've been pushing to change the legislature, but they won't until there's more grapes being produced in Texas. So that's where we come in. We're going to be putting about 3,500 tons of grapes into the market every year with each of our vineyard blocks. And right now, Texas is only producing about 14,000 tons of wine grapes. The need is 28,000.
Wow.
So we're going to be bringing another 3,500 tons per vineyard block into the market. So we've got 2 that are getting planted right now. So that'll bring another 7,000. So we'll be the largest vineyard operator and control more than 50% of the grape supply here in the next 5 years.
Wow. That's impressive. That's really good.
It's exciting.
Good. So I saw pictures of this, and it looks like they've got all of the, I'm going to use the term wrong, seedlings or whatever. What are they called?
Yeah,
in the green room.
Yeah,
in the greenhouse. In the greenhouse,
yeah.
The vines in the greenhouse. It was like hundreds of thousands of them, I think.
Yeah,
and somebody's got to somebody manually prunes those until they're planted in the spring.
They do. And we pay for that, we pay for the nursery to prune them, but yeah, 240,000 individual vines to plant one vineyard block. So and one vineyard block is, 350 acres.
Right. So let's walk through the business plan at a high level, because again, this is new to everybody. So you've acquired the land. So I'm in the second block. I'm invested in the second block. You've already done one that last year you started. So, and these are just basically new, how you want to phrase it, new plots of land, really, in a new investment base. So this, these wines are a little bit different than separate from the block one, but you have different what's it called?
Varietals.
Varietals. That was a new word to me too. Varietals. There's how many varietals do we have in our block? 12
to 14 in each vineyard block, and those wine varietals. So like a varietal example would be Tempranillo, right? That's a certain type of grape. Another varietal would be Cab Sauv, which is what Cabernet Sauvignon, which is what most people are familiar with. Vermentino. We do a lot of reds here in Texas. They do really well, and they also sell for more per ton than whites do. So we've got a balance of that, right? We make sure that we've got plenty of reds in there, but there's usually 12 to 14 varietals in each vineyard block, and it's all based on the soil type in that plot of land. So we just closed on 386 acres of land for block 2, the vineyard block that you're invested in. And we run due diligence in this space is, you do due diligence in multifamily, you do the same thing here. It's just a little bit different. We dig soil pits. So we dig about 4 feet down and 6 to 8 feet across. And we do about probably 7 or 8 of those across the property, these big soil pits, and we run soil analysis. So the soil and the water quality could be different in these 40 acres compared to the 60 acres adjacent to it. So we literally plant the varietals based on the soil type across that plot of land. So it's very much a scientific approach and very meticulous when it comes to choosing varietals.
Oh, so you maximize the productivity. So yeah, right, 300 acres is a big piece of land. So in this area, this varietal will grow better than other areas. So you optimize the production of the grapes then by doing that.
Yeah, and we even
Wow.
layer on top of that the rootstock type as well to make sure that it will grow well in that soil type. So there's a lot that goes into it in a good way. But
Okay, so
yes,
we've got the land, we've got the seedlings or the vines.
Mhm.
So let's walk us through block 2. In the spring, what happens? These be planted, and what goes on? What's the rest of the business plan from there?
Yeah, so well, right now, as you know, we did our investor webinar last night. We've got a cover crop that we're putting in, and we'll cover crop on block 1. Sometimes you put cover crop in to keep the high winds that would come in and just kind of erode the soil. It just helps keep the soil moist. It makes it great for when we start to, really get ready to start putting the vines in the ground. But we'll do land prep for the next, 4 to 5 months or so, make sure everything's super flat. The soil's been tilled up. And it's got plenty of moisture. We're going to turn over a lot of the wells. So we buy wells on the property. Properties that already have wells in place, we typically will, I don't know what you call, it's like renovations and multifamily, but we tweak them operationally to make sure that they can pump out enough water. So each of our wells, fun fact, will push out about 800 gallons per minute. That's the, I guess you call it the RPMs of a well, but we usually have 7 to 8 wells on each vineyard block, and those can be controlled from our vineyard operator's phone. They can control the water that that heads out to the vineyard. Yeah, to each block specifically, I mean, we can control the water amount. So the irrigation, all of that will get put in. The vines will actually come in from California. They're in the nursery growing, and they will come in from California around mid-May. We wait until the risk of frost is kind of gone and we've finished winter, and then those vines will get planted in the ground, and there's 240,000 of them. So vineyard installation will take a few weeks to get everything in the ground. And then every single vine gets a little vine shelter that goes around it. It's like a little plastic, picture like a PVC pipe that goes in around it. And then 240,000 T-posts will get put in as well. And just for kind of a visual, the steel that's coming in for the amount of T-post, it usually takes about 48 to 50 18-wheeler loads that drop off steel. So it's quite the production to get everything to the site and get ready for installation. So we're going to be incredibly busy in May installing that vineyard block.
And then the thing about the T stakes and their metal is that it allows you to do the automated using this piece of equipment versus 80 individuals going out there and working. You've got a piece of equipment, 3 people run the whole farm.
Yeah, it's a different type of trellising. There's what a lot of the farmers in Texas are using is old school, and there's nothing wrong with it. It's a great way to grow a vineyard, but it's called VSP. It stands for vertical shoot position, but it will typically grow your vineyard like a hedge. So picture, a hedge that's 3 to 4 feet tall, and the grapes, the fruit is hanging in that hedge. What we do is high wire trellising. And so it's just one long line of grape hanging underneath the canopy of those leaves. And because of that, when our machines go through there, our mechanisms are not getting caught up in the wire like they would with a hedge versus what's called high wire. So it does allow you to use machines. And it also, you can hang more fruit on these types of trellising. Most Texas farmers are only producing 1 to maybe 4 tons of grapes per acre. We'll be pushing about 12 to 15 tons of grapes per acre.
Based on the design, using the technology and the optimal design to produce the most amount of grapes. Wow.
Yes, and all of the science that goes into it, and the varietals, and what's their maximum capacity of how much fruit they can hang. And yeah.
It's impressive. It makes me feel better the more we talk about it. I was comfortable to begin with, but as you really get into it, you realize this is just as complicated as anything else in terms of investing and making sure you have a really strong operator like Mason, your biologist and your farmer guy. He is just phenomenal. He's so excited to talk about it too. It's just a blast to listen to.
Oh, I know. I learned every time I hear him talk, I learn something about grape farming and the science behind it and the root stocks that we select and the sunlight and the minerals. I mean, it's fascinating.
And so the projections for demand is super strong for this. So that you've picked out the soils and everything to optimize the production. We're automating everything. So what is to a passive investor, what is the time frame of this investment?
It's longer, right? So we're used to 5 to 6 year business plans in multifamily. In the vineyards, we are a few decades. So I say a few, maybe 2.5 decades, but vines are not an annual crop. So you plant them once and they will grow and produce fruit for 25 years. So that is the draw to a lot of investors, is they like the passive income for 25 years. The only caveat of that is you don't get fruit the first year when you plant the vines. So we spend the first 4 years training those vines, obviously getting them in the ground and just training those vines up to the high wire, building a really strong wood stock. And then we come out of the gate really fast and quick in year 5, producing, 12 to 15 tons. We'll get fruit in year 3, but we don't sell it. We just do a lot of lab testing on it. We will sell the fruit in year 4, but we really hold the vines back from full production, just from, all the kind of inputs we talked about, sunlight, minerals, and just managing the canopy. But we'll hold the fruit back for maybe 3 to 4 tons an acre to make sure our wood stock is really strong, so we can really produce at a high level for years 5 through 25 is how long they'll last. So it's passive returns for 20 plus years.
Yeah, that's incredible. There's nothing else out there like this that I've heard about.
Somebody was like, it's like an annuity. I'm like, yeah, but better.
So once it matures, so say 5 year 5 is when it's really, is there a max? Is it like 14 at year 14, it is producing the most amount? Or is it once you hit 5 years, or once it's matured, it's going to consistently perform and produce the same amount for the next 20?
It will consistently perform and produce that, but it's a lot of us managing it scientifically. Vineyards naturally want to kind of do boom and bust cycles. They want to, come out of the gate really hot this year, and the next year they want to take a year off. So it's, up to us to manage the vineyard from a scientific approach with the minerals we're using, the sunlight they're getting. We have consultants that we work with that are both Texas-based and California-based to make sure that we're producing at the levels we need to. Plus, a lot of the varietals, their maximum production could be 18 tons, and our pro forma is only at 12. Like, we're not going to push them to 18. We might push them to 12. They will get tired. They'll start to get tired around years 22, depending on the varietal. And we just watch them. And once the yield starts to drop, so say that this, varietal of Cab Sauv has been producing, say 11 tons per acre for 20 something years, and it's year 22, and we see at harvest that we're only getting 8 tons per acre. We're like, okay, this one's starting to get tired. So we have a contingency fund where for those 20 years, we've set aside profits from harvest every single year. That contingency fund is worth about $5.5 million around year 20. And so we have this pile of cash that we're then going to pull from and say, let's replant these 30 acres. That way we're not wiping out the whole vineyard at once and replanting. Right. We'll strategically replant over 5 to 7 years.
Oh, okay. So it's cash reserve, but it's self-imposed cash reserve. Now, in multifamily, a bank will require, you need to hold back $1 million or $2 million. Well, you guys are doing this yourself because you're thinking about, I've got to renovate these, if you will, in 20 years.
Yes. And my dad well enough to know that all that's not just going to sit in cash. He'll put it to work. So we anticipate it being more than that, but we'll see. It'll at least be about $5.5 million around year 20.
That's outstanding. That's outstanding. And another question somebody asked last night in your webinar, and you do a great job communicating. I always know exactly what's going on with my vineyard money, which is great. My wife will ask, well, how's the vineyard doing? And I always know, because you're on top of it, and your webinars are always so fun. Your meetings are always so fun. Somebody asked that, okay, we're planning all these 250,000, whatever, vines in the spring. What's the success rate? How many of those don't live? What does that look like, and how do you handle that?
Yeah, I mean, in our pro forma, we have a 90% take, or a 10% death rate on the vines if you just put them in the ground and they don't make it. But we'll typically see an average over the vineyard. It's usually 97 to 98%. And the great thing about where we're ordering these vines from is if that happened, like Mason mentioned in our webinar last night, if that for some reason happens and we can see a kind of a string of 15 vines that just never took, they will send us new ones, and those will get put in the ground and replaced in year 2. So for the most part, we have a really good take on planting.
Excellent. You've got a contingency plan that, okay, we're just going to replace it. And in the early years, it's really good. It's when, like, at year 15, if some die off, then you're going to have these really off. I got a brand new plant here with a 15-year-old vines next to it.
Yeah. And you'll see that occasionally. You'll see that sometimes, but for the most part, it's not too bad of a death rate, which sounds horrible, right? A death rate for vines.
No, that's right. I didn't go. Let's call it, what is it? vacancy rate. Let's call it
A vacancy rate. I
The vacancy
like
rate's
that.
about 10% max.
Yeah. Yeah.
So
It's not as aggressive as a death rate.
yes, yeah, that's good. And then let's talk a little about from an investing standpoint. In apartments, you've got the big depreciation and all that. What do you guys do
Yeah.
from a tax standpoint? How is it a tax advantage?
Yeah, people are shocked to hear this, but we actually run cost segregation on it, just like we would in multifamily. There's a ton of tax benefits. We can depreciate, you can't depreciate raw land, but
Right.
we can depreciate the steel, the vines, we can depreciate our equipment. We can actually depreciate the aquifer that the land sits on top of, which is our water source, because we own our water rights in Texas. So we're looking at, for a year one tax benefit, even with bonus depreciation dropping to 80% in 2023, we're still looking at about a 42% year one tax benefit. So, and about 78% overall is what we're right now seeing. We're going to continue to work with some CPAs and consultants and make sure we're taking advantage of all that. But great, great tax benefits. And the other thing that's similar in the multifamily space is we do have a capital event in our pro forma. We've got a targeted refi year at year 8. So, our refi pro forma is 8%. So if we're for some reason in a crazy interest rate environment, 10%, let's hope not. I'm sure people that are listening are like, I hope not. But if we didn't refinance, we'd still do about 21 to 22% per year return for investors, even without the refi. But if we do the refi, if we're anywhere between less than 8%, we will return quite a bit of capital back to investors and just basically pull that equity out of the vineyard, put new debt on it, and it will still continue to cash flow about 16% per year, even after the refi. So we've got options, which is good.
That's incredible. Those are incredible returns, but you have to be patient.
Yes.
Everything in real estate, it's not get rich quick, it's get rich slow. And vineyards definitely the slow portion of it. But then, but I like that because like I've just had a deal that I passively invested in years ago just sell. Now I've got some more money. I've got to figure out what I'm going to do with it.
Yeah.
It's almost and we hear this a lot of investors like, well, I just want to put something and let it sit there for 20 years. Not every 4 or 5 or 6 years. I got to figure out what I got to do with that. I got to reinvest it. And that's the beautiful part of this is like, I just set it and forget it. You guys take care of all the management of it all. I get to listen to your fun updates on it, and I'm going to reap the profits over 20 some years. I mean, where else can you do that? I think it's so powerful.
It's crazy. And that is one of the reasons we named the brand Texas Legacy Vines, is not just the legacy that we're building in Texas, because there's some winemakers with largest wineries in Texas that kind of got teary-eyed when we told them what we were doing. They said, we've been waiting for this, that want to take their wine national. And so we're like, we're building a legacy here in Texas, but we're also helping other families build theirs at the same time. So it really means a lot to us. This has been definitely a passion project, and we just feel really grateful to be doing it. I mean, it's exciting. You can see the excitement just from our webinar last night. We love talking about it. It's been a lot of fun.
Well, all of us investors are really excited. So here's another thing, like somebody had asked, I think Tony, our buddy Tony, said, can we track these wines? So we produce the grapes here, and then they're sold to somebody. So can we track our wines? Yes. Are we able to take this and buy this at the Myers in Michigan? Hey, this is where this vineyard came from, this vintage came from.
Yeah, it probably, to get out of state, we're going to have to fill the current supply gap here and then Texas decide if but, we have had conversations with one of the largest wineries here in Texas and possibly planning out future vineyard blocks just to supply their desire and goal to take a wine national. So we've got plans for that we're pretty excited about. But yes, we will track it. I had last night I mentioned that I love the Semillon wine, that grape, because Mason, we did an investor party, one of our investors' homes like maybe a year and a half ago, and he brought a red and a white from his vineyard, right? Wines that were made from the grapes at his vineyard. And the Semillon was so good. And you could see on the back of it, it said, from Cannon County Vineyards. So we do plan on, like, some of those wineries are proud of that. They want to, to put your name on it. So we definitely plan on tracking those bottles and maybe even create our own little private line of wine, right?
I don't think you won't have any problems getting investors for that, I think.
No, they'll love it. They'll love it.
I want first right of refusal on those as a current investor. I want to be able to be on the short list for that one.
My dad and his dad jokes, but we were going to put on the bottle, this juice is worth the squeeze, right? Like, it took a long time to get it, but this juice is worth the squeeze.
It is.
So
It is. And it's
yeah.
great. I didn't realize it. So Texas Legacy, that's what it is.
Yeah. Texas
It,
Legacy Vines.
you're actually helping the industry in Texas by kind of being on the cutting edge, doing these huge plots, automating
Yeah.
it, and then helping position it in the marketplace and allow them to produce more wine. I didn't realize that it has a
Yeah.
wider spread impact than just your one farm, as you're helping the whole industry there.
Yeah.
And
I
that's
mean,
great.
we've kind of flown under the radar for the last year and a half. We wanted to, right? Because we didn't want our land costs to go up a whole lot. And there's already rumors kind of swirling around about what you guys are, there's a billionaire out here buying acreage. And like, no, we're not billionaires, but we are buying a lot of acreage out there. So they're excited about it. I think that it will, like you said, it's going to help them kind of bridge the gap and create new wine lines that they've been wanting to create, expand their business. We definitely plan on getting involved in more pieces of the supply chain for wine. One of them is the crushing facilities. So Mason and his family have their own custom crush facility. Those crush facilities are running around the clock during harvest in Texas because there's not enough of them. So our next step is to start building out crush facilities just to manage our own harvest for our winery clients. So that'll give us an edge as well over other vineyards. But,
so forward integrating, not only making this,
Mhm.
so you're getting farther down in the processing thing.
Yes.
Which adds value. Everything you do like that adds value. And if you can create a margin there, that's great.
Yes. Yeah.
Wonderful. Fascinating stuff. I'm all in vineyards. So I
Aw.
think you guys know that. And I think it's great to expose people to this, that there's other options out there, even other than, just
Yeah.
multifamily, which we think is fabulous. And I know you do as
Yes.
well, but this is a great opportunity to diversify within that. And we certainly did. So thanks for sharing all that.
Of course. I feel like the multifamily world, this is probably a bad way to say it, but it's like the gateway drug into specialized investing, right? Like once you get into multifamily, like this whole world opens up of all these cool investments that nobody knew was possible. So I just love that idea of moving money out of Wall Street, moving it to Main Street, and really giving investors options that can truly help them achieve their financial goals. So there's so many options out there, vineyards being one of them, but multifamily being a staple for sure.
Yeah, like vineyards are certainly only the ultra wealthy, and those are people that had enough. Like you said, the billionaires that, I bought a whole vineyard in California. Those are the only people that were owners of those. Now it's people like you and I can be an investor in those and part owners. That's great.
Awesome, I love it.
Well, now's the time for our lightning round.
Okay, should I be scared?
Be a little bit nervous, Keeley.
Okay,
There's just 5 fun questions to get to know you a little bit better.
Okay.
Are you ready?
I'm ready.
This is going to be interesting because I know your family pretty well. What was your nickname as a child?
Oh, it came from my grandma, and it's Twinkle. I know.
It fits.
Yeah.
It's your twinkling personality.
Thank you.
I love it.
She still calls me Twinkle today.
Oh, that's sweet. Number 2, are you a morning person or a night owl?
I'm a night owl. I've tried to be a morning person. I've read, Hal Elrod's books, I can't. Maybe I could, but it's just not me. I stay up late. I get these bursts of creativity at 2 a.m. and I'm up all night sometimes. So it's just, I got to roll with what my body's telling me.
Thank you. Me too. And I've tried, and I've got Hal's book on my thing. I tried and tried throughout the years, and I just can't. So I know what you're saying. It's our natural tendencies not to be a morning person.
And I like a slow morning. Like I want to drink my coffee and read a book for like an hour and a half. I don't want to like rush. I did all that in the corporate world. So my mornings are so precious to me because 3 to 4 hours I'll luxuriate before I actually get to work. And that's important. I think it makes it easier.
I've seen pictures of you on your balcony with your cute little dog having coffee, I think, on social media because we're friends.
Yeah.
So I can picture what you just said right there.
Yes.
I love that. Number 3, what's the first thing you do if you won the lottery?
Oh, the first thing that came to mind was my family. Like I would, probably do a cash infusion into my sister and brother-in-law's business. It's called Goats on the Go. And they literally rent out goats for vegetation management at ranches. I would probably buy my parents a house. They don't want that. My dad would want land. I'd probably find a couple thousand acres, just buy him more land and put a cattle operation on it. Everything's for my family. I can't really think of stuff that I want for myself. It's always been, about my family. There's a lot more joy, I think, in that.
That's wonderful. Number 4, if you could live anywhere in the world, where would that be?
Texas. No hesitation. Texas. I'm where I'd live. I know people are like, there's so many other pretty places in the world, and there are. And I think I would love to visit there, but I'm a 7th generation Texan, and this is where my heart is, and this is where I'm staying for the rest of my life.
That's great. That's great.
Yes.
That is wonderful. And then the final question is, what's one piece of advice you give to new investors to help them get better returns? One key nugget, Keeley.
One key nugget. I would say really get to know your operators, because any business plan can look good on paper. Underwriting, anybody can change numbers in a spreadsheet, but when you're investing, it's not so much in the deal itself. You're investing in the operator. The operator, like when people are investing with you, Matt, it's not about the multifamily deal. They're like, I trust you, and I trust you to keep your word. I trust you to come through. I trust you to always make the best decisions, no matter what curveballs happen, because they do. There are always curveballs in investing, but people trust your leadership and your ability to execute a business plan and take care of people to the best of your ability and protect their money. So it is always about the person you're investing with more than the investment itself.
Mic drop. That was so good. I fully agree. Well, I do want to talk a little bit more about some of the other things you're doing and how people can get a hold of you. Again, you're a sales coach. Your niche is really women business owners, but you help people like me too all the time. I mean, you've got your weekly newsletter that I get nuggets out, like to remember to use the gifts in communications to keep things light and fun. I mean, I always get something out of it. So tell us a little bit about what you do there as well, in addition to your vineyards and your multifamily.
I mean, my passion, I'll never stop sales coaching, because I really feel like it's my gift that God's given me in my life. To like, that's why I left corporate. The further I climbed that corporate ladder, I got further away from my passion, which was seeing a direct impact on my sales team and my sales people. So my passion now is helping business owners. Most business owners, that sales skill is the missing component to growing their business, and they avoid it because they hate it, and it feels so like, I don't want to be pushy or aggressive. And my approach is the opposite of that. And I found a way to sell and broke records and built an incredible career and generated over 900 million in revenue from being authentic. And my clients were raving fans at the end of it. So if I can teach that to other business owners and make them feel like, okay, I can survive. Like, I can not just survive my business, but continue to grow it and really thrive. That's what brings me joy. So it is my passion business. So I help a lot of women business owners, started doing some corporate sales trainings as well. I coach some in the real estate space for raising capital. But yeah, I mean, you can find me on any social media platform. Shoot me a message. Like, I'd love to connect. I get a lot of messages from doing podcast interviews like this. But yeah, any social media outlet, you can find me there.
Excellent. Thanks so much. I appreciate it. And your contact information will be in the show notes. Hubbard Capital.
Yes,
I get that right?
Group. Yeah, Hubbard Capital Group.
Hubbard Capital Group and all that. And you're out on the social. So I do recommend people follow you. Just some great content. And you really are helping people. The small business owners don't have the $1 billion budgets that Wall Street does to advertise. And that's why people don't know about this stuff. And that's why it's great that you're helping those people get the message out, to help people gain financial freedom. So
we're in an impact business. This is not just about making money. It really is about transforming lives and how people feel about themselves and their future. So there's a lot at stake and a lot of responsibility, but I think we're both grateful to have that on our back.
We are. And you do fabulous at it. Thanks so much for your time today, Keeley. As usual, it's a pleasure. We always have a blast chatting.
I'm honored, Matt. Seriously, thank you for having me on.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.